continue with the control account. The key thing for the control account topic is that there are two accounts that we always need to memorize. How to prepare the control account. Let me copy the slide to the bar so that at least you have a copy for it. So this is a sales ledger control account. Another account which is a purchases ledger control account. So only these two key things, always try to memorize where is the position should we go to when you have the purchases ledger control account or sales ledger control account. So sales ledger control account, which is the total customer. Balance brought down, debit side, credit sales, dishonor check, interest charge, balance carried down if you have is a normally small amount. Whereas balance brought down, this small amount, because this one will bring it to the following month. Bank cash, discount allowed, sales return, irrecoverable debt, contra to the purchases ledger, it will be in the credit side. And take note that this account do not enter the cash sales, do not enter the provision for doubtful debt. For the purchases ledger control account, credit side, we have balance brought down large amount because we are owing the supplier. Purchases, interest charge, balance carried out small amount. Balance brought down small amount because this amount will bring it to here in the following month. Purchases, debit, purchases return, debit, cash book, discount received, contra to the sales ledger control account. So based on the question that we have here, now we start to prepare the T account. Okay, most of the time if the question asks this topic, they ask you to prepare the T account or the sales ledger control account and the purchases ledger control account. As usual, we put in the 6 column if we have the date, everything. Okay, here, the question number 1, they say prepare a sales ledger control account. Sales ledger control account. If you want to have more detail about it, refer back to the notes that I given. Date, detail, and $sign. 3 column as usual for the ledger. For the IG question, normally they require the date. Okay. So first of all, we say that prepare this for the June. And they given the opening, which is that balance on 1st June, control account for May 9,000. So this one is opening. So which is we have 2014 year first. After that, month and balance brought down. So because this is the asset, balance brought down in the debit side. And the amount is 9,000. Okay. The next one, if you want to do the sales, the debit side first, we look into what are the items, or we follow the sequence in here. Total credit sales. So here, because we are preparing the 1 month account. So in here will be the last day of the month, June. So here is a sales. You can put credit sales if you want, or you just put sales also fine. Okay, there is amount, and in this side they have receipt, which is the bank amount that received. Because it's a big amount, we assume it's a go to the bank. Okay. Which is the bank amount. And the amount is 31,000. Next is that discount allowed. Discount allowed and the bank always together. Discount allowed. Customer, this is because this is a customer. Let me insert this is a total credit customer. So total credit customer, this is a asset to the business. Okay, so this one is a discount allowed to the customer, is the expenses to the business. Next is the sales return. Sales return in the credit side. Sales is in the debit, sales return credit. 5,000. Bad debt. Okay, this is the old term bad debt. The new term for the bad debt we call irrecoverable debt. So this is applied for the 2000 onward the question. So take notes about the change of the term. Actually it's a bad debt, same thing. It's a debt that confirm cannot get from the customer. So now what we're going to do is we have to calculate debit and total, debit and credit total. Okay, just check first how much the differences, then we adjust it, the balance carried down. So the amount debit more than the credit. So the balance carried down will be 4,600 minus this all the amount of 40,000 one shot, also fine. So this is the differences. And don't forget, account balance carried down, balance brought down, always one set. One debit, one must be credit. So there is a basic rule that you must remember. And the date is 1 day difference. This is 30th. This is actually 30th. June 30th, we only write one time. This is July 1st. Okay, so for our account, control account, we consider done for the question 1 for the sales ledger control account. Okay, so the next question they ask to prepare the purchases ledger control account. So it's very important is that to memorize this format. If you can't or you get not used to the key account yet, memorize the position of the debit or credit for this sales ledger control account and purchases ledger control are fixed. It will not change. The only thing in the exam question, the number is changed. Okay, let's continue to prepare the second question, purchases ledger control account. It's just to show you one different type of it. So for the purchases ledger control account, purchases ledger control account is to record the credit supplier total. This is for the total credit supplier. So supplier, we are owing money. So this is a liability to the business. So that liability balance brought down is in the credit side. So June 1st balance on this one is on the date of March. Sorry, this is a March 1st. So the amount is 53480. So this is the amount that we have. Next is that credit purchases. Credit purchases is in here, 31st, because March for 31 day. Here is the purchases. You can put credit purchases or purchases also fine. 185,920. Okay, next is that after that we have this one, payment discount receipt, which is in the debit side, which is bank amount. We assume it's for put into the bank because it's a big amount. Next is a discount receipt. So take note that the account name or the detail are fixed. For example, sales ledger control account, sales return, irrecoverable debt, discount allowed. But purchases ledger control account, discount received, this is an opposite. If you have any return, purchases return, so it's opposite to the purchases. So always remember, purchases return and purchases account are opposite. They will not together. Let's move on. So we complete the entry. So the next thing, subtotal. So this is what we have. Calculate how much the difference. Take this minus 177,670. This amount is from here, the total, okay? So the differences, balance carry down. So balance carry down, balance brought down, as usual, must be complete one set. Okay, so this is the information that you will get for the purchases ledger control account and sales ledger control account. It's a different side for it. Okay, for the question 3, I will not do on it, so you all will do it as yourself. Okay, now I move to the question 5. Okay, question 5, they say that prepare a sales ledger account include other detail. The following information entered in a business sales ledger control account for January. So inside in here, they have debit and credit. That means there are some customer we are owing them money. And this is the all the transaction, but not all the transaction is relevant. Some may, some may not. We need to see whether it's the relevant or not, because sometimes in the exam they will mix everything. They want to test your understanding. Okay, now we prepare this sales ledger control account. Sales ledger control account. Same thing, 6 column, date, detail, and the dollar sign. In the exam, this format they were given to you. The only thing you need to fill in the detail and the which site that you should go to. So first of all, beginning of the year, which is 2014, January 1st. Sales ledger control account is an asset by right, but somehow this question got the liability. Take note, balance breakdown must be taking the bid amount. Here they also put debit. So here credit another side in here, which is in the credit side, means that this amount is sum of the, I put in the comment here so that at least you can refer. When we have the opening balance in credit side, this is trying to tell us that sum of customer, the business owed money to some customer, which is become a liability in business. Why this thing happen? Maybe it's a down payment or deposit received from new customer, because you get customer cheating, didn't pay you, you get them to pay deposit before deliver the goods. So this is the could be the reason. Okay, in the exam sometimes they will ask you. Okay, now continue. Here we have credit sales. Credit sales, because we do 1 month only, January got 31 days. Credit sales is in the debit side, 27480. Sales return always opposite to the sales. So here, sales return. Okay, now next is that 620. Next is that receipt from trade receivable. So receipt means receive money, customer pay money. Customer pay money is in the credit side because customer giving out. So because it's a big amount, we put that. Okay, but they didn't indicate it, you can put cash as well. Okay, next is discount allowed. Discount allowed and the bank always together. So discount allowed. So let's move this on a bit. Okay, so discount allowed is 330. Next is that, okay, refund to trade receiver. We pay customer, means that customer receive money. Customer receive money is in the debit side. So we put debit side and the amount is 110. Next is bad debt. Bad debt is an irrecoverable debt. So we use a new term, irrecoverable debt. Okay, let's move on. Okay, interest charge on overdue account. I mean, we charge customer. Charge customer is that customer is going to owing more money. So debit side. So interest, because we charge them, we receive the interest. Business receive the interest. We call interest received 70. Next is that dishonest check. So this check, last time, one of the customer may pay using the check, but now the check company, the bank refused to pay. So we had to give back to the customer. So if customer will receive the money. So this one will be debit side. And because this is a dishonest check, we put inside the bracket dishonest dishonor check. So this is some indication that you put in your account. Put the account name first, after that behind is the detail of the transaction. Next is contra. Contra is always to reduce the sales ledger control account. So in this case, to reduce the control account, that means should be in the credit side. So how are we going to write it? We put purchases ledger and then put here put contra, so that we know that this is to be contra to the another supplier, which is the same person. So 490. So this contra account, when it was happened? So it was happened when the, just put in some notes so that at least you can know. Same customer, a customer who is also a supplier to the business. Same person, or same person, and this amount we take when we have the contract amount should take smaller value from sales ledger or purchases ledger, whichever is smaller. So take note that if you have a customer and also a supplier owing the difference outstanding amount, so take the smaller to put into the contract for the both sides. Okay, next. Sales ledger balance. This is end of the month. We have so this is a typo error. This one should be the January. We use the January for it. It's typo error. Debit, they didn't tell us how much of it, but they give us the credit balance. Credit balance in here is indicate that balance carried out. They give us the balance carried out 390, but they didn't give us the balance carried out in this side, the credit. Here. This means the credit balance here, 39, is referred to this date on the February 1st, balance brought down. So this is what they meant for okay, just to put in some highlight. This is what they mean by the credit balance, which is that in the credit side, we are owing one or two customers. We are owing them due to some reason that I say, down payment, deposit, receive, all this reason. So this one actually is referred to this credit. But when we put in balance carried out, it's in the debit. So be careful with the transaction. Okay, now the next thing we subtotal first. Okay, here debit more than the credit. So our balance carried out in the credit side. Okay, so this amount will transfer to here, February 1st, balance brought down, and the amount is this amount. So this question, they ask us to find this amount. How much the balance at the end? Okay, so now let's move on. Normally this topic come out is quite straightforward, not much thing to worry. Okay. Now question 6, as usual, I will expect you to try it out. Now, question MCQ, we will do in the MCQ paper. Okay. For this question, this is another question that sometimes in the exam, as I said, they mix two accounts together, but we need to know which one have to go to which account. So they say prepare the purchases ledger control account and sales ledger control account for April. So to save the time, what I'm going to do is I'm going to take the transaction that I already created in here, but only delete the amount. So you notice that most of the time account are repeated. It's just the number are different. Okay. So I'm going to delete the number, everything, since that is not used yet. Okay, we see what are the information in the question. So this one is April. So they say that sales ledger debit on the April first balance brought down. Sales ledger debit balance means that here sales ledger control account is in here. At the same time, credit also had the amount. So we have to put into here April 1st balance brought down. So this is another amount that we have to take in. Next is that purchases ledger debit balance. So we put into here April 1st balance brought down. Purchases ledger is a purchases ledger control account total. Okay. Now amount is 640. And then here April 1st. Here we have 22470. So this is the the amount, putting wrong. So balance brought down. And the amount is 22470. Next is that sales. Here be careful already. They purposely put in the cash sales. As I mentioned in the note, no cash sales record in the sales ledger control account. So in this case, we only taking the credit sale. So don't take the cash sales. 51830. For the purchases, also they try to confuse you. They put in the cash purchases. Don't take the cash purchases. Only the credit purchases. Because this is a supplier. Supplier owing, only we do the recording here. Next is that sales return. So this sales return is opposite to the sales. So it should be credit side, sales return. So the amount is 1240. Next is that purchases return. Purchases return always opposite to the purchases. So purchases return. Okay, the amount is 930. Payment to trade payable means that we pay supplier money, which is you can put back or cash, unless they specifically say check, then all must put under the bank. If they didn't mention bank or cash, also fine. Receipt from the trade receivable. So customer pay money, which is the bank account. So bank how much? Bank receipt from customer 52600. Okay. Discount allowed. Discount allowed is related to the customer. So discount allowed in the sales ledger control account. So must be clear about the information that you have. The next is that, okay, I add one more row first. Here we have discount receipt. Discount receipt together with the bank, but it's in the purchases ledger control account because it's a supplier from supplier. It's an income to the business. Now, end of the month, they say that they have the balance, but question mark, but they give us the sales ledger credit balance 480. So means that in here, I have balance carry down 480. So in this case, in here, I have to put May 1st balance brought down, which is this amount. So from here, the amount that I had, this is my total, this is my credit total. So I take the differences balance carry down. Take this total minus the credit total, which is this one. So here, May 1st balance brought down. Okay, the amount is from here. So we settle sales ledger control account, we move to the purchases ledger. So purchases ledger control account, the debit balance they give us to us, which means that in here we have May 1st balance brought down. So this is meant for the debit balance 210. So in here we also have to put balance, but it's a carry down. Before end of the month is a carry down. After end of the month is a brought down. So this amount is put it to here. So the amount that we got to find is a balance carry down for the purchases ledger control account. Take the credit total minus the debit total. So we get this amount. So transfer to the following month. As I say, always remember balance carry down, balance brought down must be complete one set. Okay, that is the one set rule you must have because the mark is given in here normally. So basically, we have gone through the control account. So most of the thing and most of the time, these two account, if they ask you to prepare this. So other than that, it's just a little bit of the theory question. For example, just now I put in, what is the reason? Okay, where is the why there is a, for example, here I put some remark for you that why there is an opening balance in the different side, why this one there is a contra entry. So this all can happen. The theory question they ask about it. Okay, so for my recording for today, I'm here.